Oh, hello everybody. From research, we know that people trade too much, and we know also that people like stocks that are all the way up and that are very volatile. And but that's not a very successful strategy. It's much better to buy and focus on boring stocks that do not jump up and down so much, and that are like steady earners that pay out steady dividends and that are rock solid, and they have a strong balance sheet, and companies with very little debt or without debt, financial debt, and that deliver great margins and that are market leaders. Long term, they perform much better than those stocks that go up a lot and jump up and down, and they are not so stable. So on a long-term basis, there are a lot of studies that show that heck, make sure to make and receive a nice dividend, make sure to get a stable business, a rock solid company, and invest in those long term, and don't jump up and down, jump in and out, and like really boring things. Just look at Warren Buffett's portfolio, look in his portfolio. He has those aristocrats that pay out and increase dividends for at least 25 years, like Pepsi or Johnson and Johnson, and that is the best strategy you can have long term. And people usually like those crazy stocks that don't pay dividends, that are founded just a few years ago, and maybe they grow a lot, but nobody knows if they still exist in the next 10 years. So rather go with boring things, maybe with food or beverages or utilities or telecommunications or banks that are really stable, and that's much better for your portfolio and for your retirement, and you also can sleep very well. Boring things that pay dividends, and usually I don't buy stocks that are on an all-time high. I wait for a correction. I don't feel well on an all-time high, and if you do that, you will really do well on the long run. Okay, that's all for today. Bye.